Welcome back to Inside Prediction Markets. We have a great guest today. We're bringing on Dustin Gouker.
Very popular sports journalist, both for his Substack and for his tweets.
But first, we're going to start with three things we noticed in prediction markets this week. Chris, what do you got to lead off?
Well, the first and biggest one, in my opinion, is the $20 billion valuations that are supposedly about Kalshi and Polymarket. I was excited about those. Working at our own, I'm like, are we worth $20 billion? Maybe? Question mark.
20 would be a little high for us. It sounds high for them, but rumors from multiple outlets that Kalshi and Polymarket are trying to raise at $20 billion. I don't have anything insider on this, but generally those stories leak from the companies themselves, and they don't leak them if they don't think they're going to raise close to that number because they don't want to be embarrassed. Both raises following, successful $10 billion raises less than 6 months ago. Industry ripping, as good a time as any to get cash on hand at a cheap price.
It's funny, we've talked about it, but I think one of those valuations makes sense. The other one I think is you're kind of getting fucked there. And the company starts with a P and opened up a grocery store recently. So,
item number 2. This is really boring, but RFQ creator IDs being a source of controversy. Amanda Fisher, financial policy at Better Markets and former SEC chief of staff, writes, Kalshi has affiliated traders on their platform that can see account identifiers of users and decide whether or not to trade with them based on past profit or loss. Basically an exchange's version of a casino booting out a big winner. And so that set off a huge storm of quote tweets, really, rather than replies, because it was a lot of dunking. Because that statement is not true.
It's half truth. Come on. Affiliate traders can't see creator IDs. So what she left out is everyone could see a creator ID. So it's not like we're not affiliated. We can log in and we can see creator ID. It's not that hard.
So we've talked about RFQs before on the show. RFQs are a sophisticated mechanism, and to even engage with the ecosystem, you kind of have to know what you're doing, either be able to do a little coding or have access to tools that others have built. Currently, Kalshi exposes some hashed ID for everybody who requests a quote on their platform. This is not atypical. There are a lot of TradFi institutions that reveal counterparties, often not hashed. Often it's just, Chris Dierkes at such and such a place wants $1 million of whatever bond or whatever it is. And you can think of a bunch of reasons why this would ultimately be good for liquidity. I think doing this is unpopular currently just because sharp sports bettors have been so trained to hate the books and not trust anybody who has the power to profile them that they're really against this, and they can't see how it might actually benefit them or be good for the ecosystem. So I think we're going to see this go away or get nerfed. A common approach might be no IDs on the request, but post-trade execution, there's some identifier so that you have to at least give up one fill before profiling a trade. But I think ultimately the industry will move towards decisions like this that do give market makers more leverage in who they deal with, because everybody has the option to be a market maker. Like that's a form of fairness. Fair doesn't mean you get to do whatever you want. It just means equal access. And we'll see if people agree with me. It could just be that it's so unpopular that nobody ever exposes request IDs again.
It's funny. Our backgrounds, I think, led us to different answers. I do not like the creator. I think they should be banned. We have internal debates about this all the time, and you're coming from the market making side primarily. You're like, we should need creator IDs. And I'm like, nah, that's not. But I came from an era of, you attack the books and in that regard. So it's interesting to see. Having worked on both sides, I wish I changed my opinion basically every other day on this. I think the point that you brought up that was most interesting is everyone could be a market maker. That is kind of true, and that is probably the key difference that was not fair on a DraftKings or a FanDuel is now you could actually go in to a Novig and trade on the other side. So maybe you should be allowed to. I'm curious what the comments, what people, the listeners think. You should let us know.
Let us know. Do you want creator IDs and RFQs or not? If you're the kind of person who thinks about these things all day. If I could linger on this for one more minute, I just want to throw an analogy out there for how RFQ systems might work compared to other forms of trading and gambling. If there's a high stakes, no limit game running at MGM National Harbor, and it's a mix of whales and regulars, you might cultivate a culture at that game that everybody splashes it up. They VPIP too much. They limp. The regs play pots with each other even when it doesn't make sense to. Or you could have a culture that everybody zips up their hoodie and plays GTO and just tries to steamroll everyone, doesn't say a word. Which game is healthier? Which game survives? And which game just doesn't run a week from now?
Last thing I noticed was Underdog acquiring Aristotle.
Aristotle being a holding company, I guess, for the DCM license that PredictIt runs on.
Yeah.
So basically, Underdog has bought the infrastructure to own their own prediction market backend. They've previously been using Crypto.com. Probably will continue to use it until they've finished doing the Aristotle integration. But yeah, everybody's trying to own their own rails, build their own systems, not work with partners.
Yeah. I mean, I think this is coming off of either we talked about it last week or the week prior. How they laid off a bunch of Underdog laid off a bunch of staff. They're clearly going all in on prediction markets, which is good to see, in my opinion.
Yeah, people are unhappy about it from a product standpoint, but what are you going to do?
You got to adapt to the times. You can't be a dinosaur.
You cannot be a dinosaur. It's so funny to call Underdog that. It's like a relatively new upstart business.
No, I'm not calling Underdog a dinosaur. I'm calling other people not willing to do it a dinosaur. But we're excited to have Dustin Gouker coming on. He's a journalist, has a lot of experience in sports betting and some very anti-prediction market takes, I would say. But we're excited to talk about that and also what he views as the difference between prediction markets and sports betting and some good and bad things that Kalshi has done. Hello, everyone. We have an exciting new guest here for Inside Prediction Markets, Dustin Gouker. While not a trader or bettor himself, he is a journalist and very knowledgeable in the space.
Dustin, thanks for joining us. Really appreciate you coming on. You write your newsletter, which is a paid newsletter, and then you're just a reporter and daily commentator. It also seems like maybe you're doing a little bit of consulting or have done that in the past. I'm kind of interested in your biography and what your journey through both regulated sports betting and now prediction markets has been.
Yeah, I'd say that's a good summation of what I do. I'm not like a pure journalist. I obviously have hot takes too, but I break news if I have news. I do consulting. I don't really have any interest in the prediction market space right now. That'll probably change at some point, I'd imagine. In terms of the consulting work I do, I work with mostly like early stage companies and sports betting and gaming adjacent kind of stuff. But everything starts blowing up with the prediction markets. So I do. Somebody would start a newsletter, so like why not be me about that? So I started doing a newsletter daily about the prediction market space before lots of people were really writing about this, and obviously everybody's writing about it and talking about it now. So I will say this: people think I just hate prediction markets. I think you guys know I don't hate prediction markets. I hate some of how prediction markets have happened. I hate that that we're not thinking about it in a way that was serious. We just we flipped the switch and we have online gambling and sports betting everywhere. I know, disclaimer, this is trading, whatever. But all I want is a little bit more thought put into this. And hopefully, we're going to get rules from the CFTC here. Hopefully some of that happens.
I think one of your takes is, or if it's not your take, at least some of the AGA's takes, is that prediction markets don't protect the consumers. I find that take to be very ludicrous, considering I've been a professional bettor for a couple of years. I've dealt with responsible gambling from the book side. Calling it protecting the customer is a joke. I can't get into exact details about some of this, but some of the stuff I had is just pure predatory behavior. It's abhorrent. So the argument that it's protecting the consumer never really felt real to me. Do you believe the AGA's case? And I don't know if that's your case as well. How would you argue that it's responsible gambling protects the consumer, prediction markets doesn't have it, therefore they're bad and it's worse for the consumer in that regard?
I think the truth, as always, is somewhere in the middle. It's not like that sports betting is better and that prediction markets are just as good on this front. I think, I do think there's a spectrum of what is happening in these things. I think at core, here's the problem, and we can get into there's problems with state regulated sports betting, right? State regulated sports betting is not perfect. There are lots of the states have done things that I would certainly change. I think obviously we've created anti-competitive sports betting markets in a lot of ways that have led to not enough operators, not letting exchanges, for instance, operate in a way that's material. So there's that. When I come to the responsible gambling thing, at least I know the sports books try, or and there are some regulations state by state that they try. Do they get it right? Is it actually protecting consumers in a lot of places? No, there are people experiencing harm all the time. But I'll also say this: prediction markets are when they pound their fist a lot that this is not gambling, and that's a pretty poor place to start, right? If you're going to be trying to protect somebody from who might have problems with gambling, right? You're telling them that's not gambling. I the best example I have is Robinhood, which makes no effort at all to say that this is a product that can really give you harm. Risks with trading, sure, but you go on the Robinhood app, you have, here's your portfolio. I scroll down, here's stocks. Oh, here's the money line on tonight's NBA game. That's not a serious way to protect consumers. I think that's where I come at it from. Is that Kalshi, at least they do have responsible trading tools. They're not surfaced. I've told them I think they should be on the top of their navigation. But that's where the nuance is. Are sports books and state regulated sports betting perfect on this? Absolutely not. Are there harms happening in regulated sports betting? 100%. There are also 100% harms happening in prediction markets. I've got news for you. New York Times and Wall Street Journal and whoever else are going to write stories about people losing their houses on prediction markets. That's going to those stories are going to happen over the next year. I've already talked to people who have, whether you think they're just fools who got separated from their money or not, there are people who have lost a lot of money on prediction markets. So all I want is not this conversation about that. Again, I'm not saying that yes, you have this all has to state regulated sports betting is the greatest thing since sliced bread, and they're getting it right on RG all the time. I don't think that's true, but I think there's room to do better in prediction markets and not just say, oh, it's all trading and we don't care. That's what I reject. I reject saying it's just trading like day trading or anything else. In fact, let's flip that. Instead of just saying it's all trading, shouldn't we think that there's some harm coming from people trading meme coins and stocks and all of those things? That's what I think, right? I don't think that's an outlier of an opinion. There's a lot of things that are gambling in the world that we don't treat as gambling, and maybe that's wrong.
It's funny. I actually agree completely with you. I don't know if you know that I used to work for legendary macro investor Stan Druckenmiller, and he would say in this family office, the casino opens at 9:30, implying that we are gambling on the stock market. And he wasn't an idiot by any means, obviously. He was majority of what investing is actually gambling. And I do agree with you in that point of view. I'm fine if they want to call day trading, if they want to do everything and say it's all gambling, but you have to be consistent. You have options from 18-year-old day trading, zero day expiring options be classified as investing, but trading on sports is gambling. That doesn't make any sense. They have to have the same relation. So this, I don't care what the solution is, but I just want some sort of the same approach to everything. And if that means they ban you have to have responsible gambling tools for day traders, for all that stuff, that's fine with me. I'm happy with it. I do agree with you from that point of view. Henry, did you want to add anything or? Oh.
Yeah. Well, so what I would say is, if the goal, I agree in general that we're kind of in the early Wild West days, and this isn't unique to prediction markets, right? It is very often the case that when new market categories emerge, when there are no regulations, it's the wild, wild west. It happened with crypto. It happened with the internet. A bunch of things. Such enormous categories that it seems almost silly to e-commerce, whatever. And often, what actually happens is the early market leaders will say, "Hey, we want to be regulated because they have that early lead. First of all, regulatory capture is the thing, right? If we're the only ones who are bankrolled to handle compliance, we can close the barn door behind us. But also, nobody loves bad press in perpetuity, right? They'd rather everybody kind of agree to what the rules should be and follow the rules than go on with no rules. No rules forever oftentimes gets your industry banned outright, right?
You're already seeing this, right? Like Kalshi is leaning into we're the regulated prediction market and trying to draw this line in the sand versus Polymarket International, which is a totally unregulated, on crypto rails prediction market, and that they are like speed running what you were talking about. We want to be regulated. They are, and they also like we are regulated. I think again that's like going back to like Chris's question and the topic there. They are regulated. They are not regulated in a way that contemplates them as a gambling app or in a way that is consumer facing. Right. That is the CFTC is meant for market integrity. Right. They have not like we're going to get rules, but are the rules going to contemplate anything we've talked about here? I'm skeptical on that. Right. Like again, like the bare minimum of people come to me. You guys know this. People come to me because they think Kalshi or somebody boned them on a market like resolution, right? Like, and a lot of times it's like I don't know. You did like I see where you're coming from, but also you're like I think I'm on Kalshi's side of this. You didn't read the rules in a lot of cases, right? They're on death markets are one example of that. Like there's some nuance in there, but when we talk about it as a regulated industry, it is definitely a regulated industry, but it is not the same regulation as we see in the gambling industry. As much as you want to bash on sportsbooks, they have to they're beholden to 30-some state regulators. They go in front of commission meetings all the time. They get fined. Kalshi does something wrong. It's like I yell about it on Twitter, and they're on to the next thing. And Polymarket, who cares? Like nobody cares about it. Like, that's going to bite them in the ass. And this is why like you said, we're going to see this run to regulation. And, like they are going to welcome more regulation, and the more regulation isn't going to be more taxes. That's the problem for them versus like for sportsbooks versus them is like the regulation will be just things they have to do, which aren't that onerous. Whereas, again, state by state, pain in the ass, paying, effective tax rates of 50 to 75% in some states now, like that's also terrible. Like, and that's all. And again, if I was the czar of sports betting and prediction markets, I mean, I'd want states to like find a way to allow things like prediction markets or sports betting exchanges, things like Novig, things like Sport Trade, whoever, to have a way to be a state regulated sports betting exchange. That's what should happen.
So Dustin, if in your words, Kalshi is quote speed running the process towards more regulation, more oversight, etc., where Polymarket is kind of dragging their feet, the American product is going nowhere while they're still kind of wink nudge pointing towards people towards the international unregulated product. Is it fair to say that Kalshi is kind of the market leader in pushing prediction markets towards a more responsible regulated environment, and that is that an accurate characterization, or would you disagree with that?
I would actually agree with that. Like everything we're seeing in the past, they have a coalition for prediction markets now that Kalshi put together and leads. They, they're saying they actively lobbying for a law that makes it clear that you can't trade on do insider trading. Again, as much as everybody who listens to this or you who know who I am, like I bash on Kalshi all the time, but they do things well too. Like the comm strategy and the PR strategy and the governmental relations strategy that they're employing right now is very smart because people do see it as the Wild West. They're trying to draw a line between them and Polymarket International, and also saying, you know what, insider trading is bad. We don't want that. We want this to be we want no insider traders. We would actually love to be able to put people in jail if they do this, right? That's a smart message with everything we've seen about, from the Venezuela markets with Maduro to, now the Iran strikes that people that maybe insiders were trading on Polymarket. Like you want to be like, Wild West gets overblown. I have heard it since I've been doing gambling content. Basically, every time something comes along, it's the Wild West. It is the Wild West right now. I'd argue it is not. This is the first time I've heard that term, and I'm like, yeah, it's the Wild West because we have regulated operators, unregulated operators. We have there's more crypto ones. I barely, and a lot of people barely even talk about all these crypto prediction markets that are out there that just exist, that they don't exist under any type of regulation. Actually, if we're going to have prediction markets, they should absolutely be under CFTC regulation, and there should be rules about it. That's whether they should be is again another question, but and again, like, I'm okay with prediction markets existing as long as we get some of this regulation that we're promised that contemplates it as a gambling product and contemplates it from, again, we woke up one day and we have sports betting from Kalshi. That's not a serious way to have gotten into sports betting in 50 states for everyone 18 and over.
I would argue that the real problem here is actually coming from the government. You should take Arizona, for example. They have this ludicrous, 45% tax
on
rate?
Handle?
Yeah. I mean, they make it so hard to run almost impossible to run a business. So then all what happens is DraftKings and FanDuel have to absolutely gouge the consumer to make money and to survive. And then you bring innovation and competition from places like Novig, places like Kalshi, that are like, okay, we don't have to have this monster high hold percentage. We can come in and make it an exchange and make it fairer, and then it kind of puts the government in an awkward spot. Well, what do we do? Do we legalize prediction markets? Do we not? But another point, I guess, the other side of it, and I'm curious of your thoughts here, is if the government made a reasonable tax rate, say 10-15%, just flat on revenue. That was all the gaming. That was all their gaming tax. Would DraftKings and FanDuel and other sports books, I'm only talking about those who are the biggest ones, actually cut down on hold and actually build better products, not limit as aggressively? Would they actually make the products better or just make more money? What do you think?
First off, on all that, yeah, FanDuel and DraftKings, they would probably want to hold more, but at the same time, we actually saw this in December, and people are clowning on FanDuel and DraftKings for talking about hot customer friendly results and we held too much. That's a thing, actually, right? They don't want to take all your money at one shot. They want you to lose, you want you to butcher your parlays and lose sustainably, and it's actually not just FanDuel was holding in some states 20% in December, which is nuts, right? That's not sustainable for them because people again, people are clowning on this they're saying it's actually prediction markets that are hurting them. No, people lost a lot of money, and then getting into Christmas they didn't deposit again. So on the core question, I think they would probably I hope they would make the product better in some ways. I could be totally wrong and they just they take everybody's money right away. I don't know, but I agree with the states are making it harder, and I've been covering state legislatures and what they do on this stuff, and to think that they actually understand these topics a lot. State legislatures are they're dealing with a zillion things at one time. They see a bill, somebody gets in the ear, it's we need to stop prop betting or something, and then there's a bill, and we need to make more tax money, our budget's not balanced, let's tax handle 45%. This is the unserious stuff that people deal with at DraftKings and FanDuel and the government relations people, trying to it's the Ben Affleck smoking guy meme that I love to use. We got to do this again, this, and it makes it harder. There's a per wager tax in Illinois now. These are terrible, dumb policies that it makes it harder to support state regulated sports betting and not sometimes I'm yeah, burn it all down. Let's do prediction markets. Screw state regulated sports betting. Some have gotten it right. And I'm a proponent of regulated sports betting. But as time goes on and I see we see more and more bills and this dumb high tax rates, it's not good for consumers. It's not good for the sports books. It's not good for anyone other than the state. The state is I think what the core is, the state doesn't realize it's just passing on a tax to consumers, or maybe it does, but when you're going up to 50-60%, you're just making it worse for the consumers because they're just obviously going to pass the tax on. We've seen it in Illinois with the per wager tax. They just you're paying 50 cents to place a bet. What? It's just so dumb.
Something people don't even realize, I think, is after you get done paying the 50%, in some states, tax for gaming tax, you got to pay corporate tax on the remaining portion of it. That's just for the right to have a gaming license,
right?
Normally, so it's in some spots it could be like 70%, 75% of profits are just bam gone from taxes, and it's how are these people supposed to compete?
Yeah, and there's the federal excise tax that people always forget about too. Like everybody, all the state regulated sports books are paying 0.25% on handle to the federal government. It goes like where that money goes, nobody knows. It just goes into a black box, and I don't know, and sits in the Caymans or something. I don't know what happens to it. Like nobody knows what happens to it. But there's all all this, and like again, why wouldn't you want to be an exchange in a place where I've actually advocated if it gets so bad in places that are like if they just like do dumb taxes and like. Why not just like give up your state gaming license if it becomes clear and just go to a prediction market? We have DraftKings on their investor day the other day saying their margins on prediction markets users are going to be higher. Gross revenue will not be higher, but margins will be higher because of taxes. So people keep asking me about this. It's not revenue is going to be higher. The margin on a player is going to be higher. The LTV of a exchange prediction market user is not higher, but the margin will certainly be because you're not paying a per wager tax. You're not paying 50% on gaming revenue, right? So,
all right, we know you have to go, and really appreciate you spending some time with us. I want to do one last question, and it wouldn't be a prediction market podcast if we didn't do a little bit of predicting. So, but this is an open-ended question. DraftKings market cap recently dipped to that 11 billion-ish tier, which is right around where Kalshi and Polymarket last raised. So, in theory, Kalshi, Polymarket, DraftKings, all similarly valued companies, although obviously on incredibly different journeys. If you had to forecast where we are a year from now, do you see DraftKings and FanDuel regaining ground and all of us collectively coming down from this high of prediction markets a little bit? Or do you think the momentum is still with the PMs and do you see the trajectories continuing in the direction they've gone for the last 6 months?
None of this is investment advice, right? So
yeah, right.
I think it's been overblown. Like I was at G2E in Las Vegas in October last year, and that's when Kalshi dropped that they're doing custom parlays, right? And 25% haircut of the valuations of both DraftKings, the market cap of DraftKings and FanDuel in a day. People were losing their minds. I think all of this is a little bit irrational because. Like DraftKings and FanDuel have now, like DraftKings has told us we're going to do RFQ, we're going to have like custom parlays, and they're DraftKings and FanDuel are putting $750 million between them of EBITDA into prediction markets. I'm going to bet on DraftKings and FanDuel doing pretty well in prediction markets eventually. They obviously don't have the same addressable market that Kalshi and the rest do because they're only in states. They're only going to be in states without state regulated sports betting, California and such. Like that's all to say. Like I think all this is a little wacky. Like, do you really think DraftKings is the same as like Polymarket, which is basically still pre-revenue? That's hard to believe, honestly. I mean, if you back out of Flutter's market cap right now, you think like FanDuel's valued at less than both those companies right now, like more like 6-7 billion, I think, as things stand. I'm not sure. I'd have to do the math, but like
they're about 30%. So
that's nuts. It's nuts. Like it doesn't really mesh with reality. Like do you think as you sit here that FanDuel is not as valuable of a company on its own as Kalshi, and like that's hard to stomach. That being said, long live our prediction markets overlords. They could definitely win down the road. And like I always talk about this when I do podcasts and media hits. Like I am a big believer in the non-sports stuff. People invested in Polymarket and Kalshi not just because they think they're going to go win sports, right? They invested in you guys because you guys can go win sports, right? But at the same time, the big idea of prediction markets is far bigger than retail bettors betting on sports. It is information. It is all of these things in one big thing, and like that's actually what I get excited about in prediction markets. It's not like we have to talk about the sports stuff, but like everything else in prediction markets is pretty exciting, I think.